Hello, welcome back to our channel. So today we will be learning how to do accounting and bookkeeping for the film and video production industry. So here are the few topics that we're gonna learn today. Let's start with the project budget. So in project budget, it creates the detailed budgets for each production, covering the pre-production, production, and the post-production expenses. Monitor the actual expenses closely against the budget to identify the disruption or overspending promptly. This process ensures the financial discipline, helps in making timely adjustments, and to ensure the production stays within the budgetary constraints. Second, revenue checking. To keep miscellaneous records of all the revenue sources such as production fees, distribution deals, royalties, and the sponsorships. Ensure the accurate allocation of the revenue to specific the projects to track the profitability and financial performance effectively. This practice supports the informed decision making and to ensure the transparency in financial management across the various income streams. Third, expenses. Categorize a miscellaneous track of all the expenses related to the production, including the equipment rentals, set constructions, location fees, tents, salaries, and post-production cost. To maintain a separate accounts or the cost centers for the different production elements to facilitate the detailed cost analysis and to ensure the effective budget management throughout the production process. Fourth, payroll and crew payments. To accurate records of the payments made to the crew members, actors with the production staff, to ensure the adherence to labor laws, tax withdrawals, requirements, and any relevant union agreement. This practice ensures the compliance, transparency, and the fair compensation for all the personnel involved in the production, maintaining the legal and ethical standards throughout the payment process. Fifth, taxation and deduction. To stay informed about all the tax incentives and the deduction applicable to the film industry, ensuring the compliance and maximizing the benefits. Keep records of all the eligible expenses such as production cost and investment in the local economics to accurate the claim deduction and incentive during the tax filing. This helps optimizing the financial outcomes for the financial film project. 6. Contract and agreements. To maintain a comprehension copies of all the contracts and agreements pertaining to the production, distribution, licensing, and the talent engagements. To ensure the miscellaneous adherence to the financial obligations and revenue sharing terms outlined in the contracts. This practice supports the transparency, minimizing the disputes, and the facilities effective management of the legal and financial aspects throughout the production life cycle. 7th, petty cash and petty expenses. To track small miscellaneous expenses using a petty cash and system to manage the identify for the cost effectively. To maintain organized receipts and reconcile petty cash regularly to ensure the accuracy and accountability. This method helps to streamline the financial management by capturing and categorizing the minor expenses effectively while maintaining the financial transparency within the production budget. 8. Cash flow management. To monitor the cash flow closely to ensure the sufficient liquidity or ongoing production expenses. Considering the established lines of the credit or the contingent funds to manage the unforeseen cost effectively. This proactive approach helps to maintain the financial stability throughout the production process and to ensure the smoothly operation, timely execution of the project milestone without the distribution of the due date financial contract. 9. Bank reconciliation. To regularly reconcile the bank statements with your accounting records, to delete any discrepancy promptly, to investigate and resolve discrepancy immediately, to maintain the accurate financial records and to ensure transparency. This practice enhances financial oversight, minimizing the errors, and support reliable financial reporting or informed decision making and compliance process. 10th, financial reporting. To prepare a comprehensive financial statements, including the income statements, balance sheet, and the cash flow statements, to provide a clear overview of financial performance, generating the trailer reports for each production, to analyzing the profitability, monitoring the expenses, and assess financial health. This enables for the informed decision making and effective management of resource throughout the production life cycle. So, here are some KPIs that are commonly used in the film and video production industry to measure the performance and the track success. First, budget variance. To measure the variance between the actual production expense and the budget cost to ensure the projects remain financially on track, enabling the timely adjustment and informed decision making to manage the resource effectively. Second, return on investment. To calculate the return on investment for each production by comparing the revenue generated with the total production cost. This analysis helps to assess profitability and efficiency, guiding the decision to optimize the financial outcomes and the resource allocation. Third, gross revenue. To track total revenue from the box office sales, streamlining the platform, distribution deals, and other source to access overall the income generation and financial performance across the various revenue streams. Fourth, net profit. To calculate the net profit by subtracting all the production and the distribution cost from the gross revenue. This calculation provides a clear measure for the financial success after accounting for all the expenses associated with the production and the distribution of a project. Fifth, cost per minute. Determining the cost per minute of the finished content by delivering the total production and distribution cost by the duration of the content. This metric evaluates the efficiency and the cost effectiveness in the content creation and distribution. Sixth, production efficiency. To access the production efficiency by tracking the shooting days, scenes for the shoot daily, and overall progress against the schedule. This monitor helps to evaluate the productivity, identifying the potential delay, and optimizing the workflow for the timely project completion. Seventh, cost of acquisition. To calculate the cost of per acquisition by delivering the total expenses on marketing and distribution by the number of viewers or customer acquired. This metric helps access to the efficiency and effectiveness of marketing campaigns in the acquiring the new audience or customer. 8. Awards and reconcile. To track award won, nominations, and the critical acclaim received by the production to gauge their quality and success. This serves as a valuable indicator of the industry recognition and audience appreciate, influences the preparation and the success of the project. 9th, distribution metrics. The number of screens measure the distribution across the theaters or the platform where the content is available. Releasing the strategy evaluates the success of various releasing strategies such as wide release, limited release, and online premiere to optimize the distribution and maximizing the audience reach. 10th, audience engagement metrics. Box office gross. To monitor the theatrical box office earning to the excess financial performance and audience turnout. Streamline views. To track the digital platforms views or the streams to measure the online audience engagement, audience rating, and the review. Analyzing the audience feedback and rating on the platforms such as IMDb, Rotten Tomatoes, and the social media to evaluate the reception and impact. Thank you so much. See you at our next video.